Morning everybody and welcome to today's morning market. So today I'm going to focus in on the recent moves in the oil price. Okay, so let's just dig into that and what has been happening over the past few months. So if we just use Brent as the proxy for the oil price, what has happened is that probably mid-December time, you saw Brent around about $73.50 per barrel. And then since then, what you've seen is the oil price climb upwards. So it peaked out most recently in early April, around about $91 per barrel overall. But what's behind that? And remember that all prices are a function of both supply and demand. So from a supply perspective, you're probably seeing two things. So the first thing is the escalating tensions in the Middle East. So that's pushing up on the price overall. And also the oil producers, so OPEC Plus and other oil producers have curbed some of their supply. So again, that pushes up on the price. And then from the demand side, what you're seeing from the demand side is that actually the global economy has proven probably a lot more resilient compared to what many people were expecting, say, 6 months ago, 12 months ago overall. So again, there's an expectation that there's potential for higher demand for oil, which people maybe weren't expecting a while ago overall. Obviously, higher demand also pushes up on the price as well. So that's been what's happening over the last, say, 4 or 5 months. But what have we seen in the past few days? So what we've seen is that Brent's fallen to just over $87 per barrel. If we dig into that, what we saw at the end of last week was a bit of a spike in the oil price when Iran attacked Israel. But then that has then fallen back. And the key reasons behind that are some nervousness that interest rates may remain higher for longer than people were initially expecting. And also just a little bit of maybe some weaker data coming through from China on the economic side, with China being the biggest consumer of oil worldwide. What else has been happening in asset markets? Really interesting day yesterday. A lot of results came out. So UK and European equities finished up on the day, with obviously the UK inflation that you heard about on yesterday's morning markets coming in at a 2.5-year low. US equities were, in contrast, actually slightly down, and that was driven by the semiconductor sector. So you had results from ASML, so the share price there was down around about 7%, and that filtered into other companies in the sector. So ARM was down around 12%, and Nvidia was down around about 4% as well. From a fixed income perspective, you started to see bond yields come back a little bit. So we saw US Treasuries at the 10-year level come back around about 8 basis points. And remember, that's good for your returns. When bond yields come down, that actually means that bonds prices go up. So listen, that's everything from me for today. Please do tune into our Week in Markets tomorrow, where you'll learn more about everything that has happened over the week. Thank you very much.